Hello there, I hope that you're doing well. Welcome to this new video. In this video, I will be explaining to you how I was able to make $37,745 a day by trading Nasdaq futures. Here you can see the screenshot from my live account with AMP Futures, and here you can see the P&L. I will be explaining to you during this video how I was able to both short Nasdaq as ride the market up higher by buying. With this being said, I would like to wish you good luck whilst watching this lecture, and I hope that you will enjoy it. Alright, let us dive into the breakdown of today's trades. Trading both sides of the market maker model, sells to buys. Now, before we dive into this lecture, I find it important to share with you that I will be discussing advanced market maker model insights. And therefore, if you do not understand market maker models yet, I highly suggest you to check out my prior lectures on the topic. If you search up my name Zuzi and Mixam, you will find lectures on the topic of market maker models. You can find these on my channel. Now, when we pay attention to my analysis, which I had outlined for my private mentorship students in advance of 9:30, what you can see was that I outlined that the Thursday low is the draw liquidity as long as price does not get back above the red shaded BC. The red shaded BC which I was referring to was this RE imbalance right here. The reason why this RE imbalance was important to monitor was due to the fact that Nasdaq was in a market maker sell model, with an original consolidation being down here, buy side of the curve, followed by the sell side of the curve. The reason why I'm paying attention to imbalances then on the left side of the curve is because in order to gauge the order flow on the right side of the curve, I can utilize these imbalances as inversions for value gaps. Notice that we saw the market displace below that red shaded box, and therefore this is immediately the sign for me that the moment that the regular trading hours begin from 9:30 a.m., I can utilize that same red shaded box, that RE imbalance, as a point of interest to look for shorting opportunities from. Why? Because I know the draw liquidity is on the downside, which is this Thursday low. That's the low of that original consolidation. Notice, however, that I outlined that if the Thursday low gets taken out, the anticipated sell program is completed. Meaning, when the Thursday low gets taken out, that is the end of the sell program which I'm looking for. I'm not looking for the market to dump another few hundred points. No, I'm anticipating the sell program to end the moment that we take out that Thursday low. Notice that this was sent at 17:23 local time, which is 9:23 New York time. Now, the reason why I'm mentioning this is because on my screenshots you can see local Dubai time instead of the New York time, and therefore I've added that just to avoid any confusion. Notice that for ES, the exact same story was in play, where I was monitoring direction to this large imbalance right here, and as long as ES would not displace above that, I would anticipate ES to draw towards the Thursday low. In a bit, you will, however, see that something interesting occurred here from an intermarket relationship perspective, which signaled to me that we would likely see the buy side of the curve unfold soon. Before we dive into the lower time frames, I'm just going to share a concept with you, which I've been putting a lot of emphasis on within my private mentorship over this year, and that's the topic of A to B. Meaning, whenever I come to the charts, my job is to see what the A to B is that price is currently referring to. What point A right here means is that it means inception. The inception of any particular program. In this case, a sell program, since this schematic is bearish. Point B is terminus. This is the end of the program which I'm anticipating. Between point A to point B, I will be looking for trading opportunities in line with this bigger program. The moment that point B gets met, that is when I exit all positions on the downside, and that is when I'm beginning to look, okay, how is the market going to react off that terminus level? And what's important to understand is that whenever a draw liquidity gets met and you look to exit existing short positions, someone else might look to buy off that level where you were exiting your positions. So what you see then is that point B turns into point A and a new A to B gets established. And this is very important to grasp when it comes to trading both sides of the market maker model. Now, before we continue with this lecture, I want you to understand that what I'm outlining to you right now takes a lot of experience and you need to know exactly what you look for from a time and price cycles perspective. This is not something that you should strive for if you're completely new to trading. If you can just take one trade, whether it be the short or the long, and be content with that, it's already phenomenal. However, I promised that I would make a breakdown of this after asking whether or not you would want me to on my Telegram journal, and the response was yes, we want you to break this down. So I was like, okay, let's just do it. But therefore, I want you to keep in mind that this is very advanced information, so please don't feel overwhelmed by everything which I'm going to share and have already shared during this lecture. And if you feel like I'm going too quick or something isn't clicking yet, please just go back a bit and re-listen to the words which I'm using, because I'm explaining everything in a specific sequence. And the reason why I'm explaining everything in a specific sequence is because that is exactly how IBDA is delivering price. It's following certain sequences, and our job is to recognize what those sequences are, because once we recognize the sequence, we can anticipate what's the next logical step is within that particular sequence, whether it be sell or buy program. So main takeaway from these schematics is whenever A to B is completed, point B can turn into a point A for a new A to B. Now here we're on the RE chart, and what you can see is that the delivery has taken place. What you can see is that we saw the market utilize this REBC, this red shaded box, as resistance on price right here at this 9 o'clock RE candle. Do you see how this 9 o'clock RE candle opened high into that initial sell side liquidity pool objective which I had for the day? And do you see how the high exactly forms at that low? Must be selling pressure, right? We see the market then expand towards the downside and drawing towards the low of that original consolidation which I had outlined, that Thursday low. Notice that the 10 o'clock candle then opens up, drops lower, and we see the market expand towards the upside heavily. Now what's important to note is that inside of these two RE candles, there is a selling opportunity within the 9 o'clock RE candle right here, and there's a buying opportunity inside of the 10 o'clock RE candle. Now notice that the moment that we took out that Thursday low, that sell program which I had framed in advance of the 9:30 open was completed, as mentioned. Notice, however, that the SMT detector right here is signaling that daily SMT got established between Nasdaq and ES. So what that means is that ES never took out that Thursday low. So ES did not complete its market maker sell model whilst Nasdaq did. And whenever I see bigger time cycle SMT, that's already the first sign that we might be turning around soon. Therefore, what I'm looking for then is I'm looking for whether or not we're going to see the signatures get in play that confirm to me, alright, the market is now going to change from sell to buy program. So where initially this red shaded box is my point A, particularly this old low right here, and point B is this old low as my drawing liquidity, and I can then look for that point A to set up a new run higher towards buy side liquidity, towards engineered buy side liquidity throughout that run lower. So this becomes the new A to B. And I hope that you're following along with this, because it is pretty advanced to get your head around. However, once you see this and once this clicks, I promise you, you're never going to be looking at charts through the same perspective ever again. Now, when we pay attention to the 1 minute time frame then, what I would like you to see is that we're mainly paying attention to the 9:30 open. From 9:30, the regular trading hours begin, and the majority of the volatility will get induced from that moment of time. Therefore, what I would like to see is the following. What I would like you to see is that in advance of 9:30, we see the market engineer buy side liquidity in the form of relatively equal highs right here. Pay attention to the time at which these highs are forming. We then see the market very slowly grind towards the downside. And do you see how small these candles are? Eventually 9:30 opens up, and we see the market initially take out sell side liquidity resting below this low, and we then see the market begin to reprice higher. Now when the market is repricing higher like this, what do you think the majority of retail traders are thinking? They are thinking to themselves, hey, the market is opening strong today. I should go long. I should chase Nasdaq towards the upside. However, what do we know to be the drawing liquidity for the day on the downside? The drawing liquidity on the downside is that Thursday low, is that RE sell side liquidity pool objective. which is down here. Therefore, I'm looking at the low which gets formed at 9:30 as an engineered sell-side liquidity pool. We see the market reprice higher, and do you see how it begins to slow down right here? Near the lower end of that red shaded box, near the lower end of that RWBC. We see the market just consolidate and slowly grind higher. And then all of a sudden, we see the market reprice higher here significantly with this large upclose candle. Do you see how the market took out relatively equal highs which got engineered right here throughout the previous 30-minute cycles, and how the market repriced exactly into CE 50% of that hourly BC, which I'm extending to the right, and into that old low which formed inside of that hourly BC. This is that sell-side liquidity pool objective number 1 from that hourly chart. Now, what I would like to see is that the market is consolidating right here. And what you can see is that I open up my first short position right here the moment that I begin to see the signs of a swing high formation. I pyramid into this position as I see 10-minute cycle SMT be established on the highs here between Nasdaq and TS. And do you see how this candle's high forms exactly inside of that old low? Beautiful, isn't it? Now, due to the fact that this was a pretty slow reversal, you must understand that this is the engineering of buy-side liquidity which is taking place for a later moment in time. However, I'm not worried about that, and the reason why is because I know that my objective on the downside, terminus so to say for that bigger sell program, is yet to be met. Therefore, I'm waiting for the market to eventually begin to get repriced lower significantly. Now, what is happening throughout this consolidation is something you might be wondering. You might be asking yourself, why is the market consolidating above these relative equal highs? What's occurring right here is that HFT algos are firing in the short positions. Prices being held inside of the tight range so that shorts can be filled inside of that particular range. It's a very advanced concept, but it's something to think about. We then see the market eventually reprice lower significantly. And do you see how we create this CB? This CB functions as a breakaway gap. And the reason why is because price already allowed smart money to position themselves short inside of this area. The fact that this gap is allowed to stay open whilst the market reprices outside of a red shaded box tells me we're in a rush to get somewhere. IPTA is in a rush to spool towards a certain objective. What is this objective? It's that sell-side liquidity pool right here. I went short one more time right here when the market retraced higher, and that is when we saw the market eventually expand lower beautifully, drawing towards that sell-side liquidity pool objective. Now, what we see taking place then near the end of the second 90-minute cycle of the morning session, which is from 8:30 a.m. to 10 o'clock. If you're not familiar yet with this 90-minute cycle, refer to my previous lectures on the topic of time cycles. What you can see is that the market retraces higher. What does it retrace into? It retraces into a CB which formed on the left side of the curve right here. The moment I see this retracement taking place, I'm already framing in my mind the idea of a potential buying opportunity already to present itself. And the reason why is because if I see SMT then be established after one more push lower, that is immediately the confirmation, okay, the moment that we displace higher, that is where buying opportunities will present itself. Now, do you see how the market forms this high inside of that CB and then has this drop towards the downside? A new 90-minute cycle opens up at 10 o'clock and we see the market open low. Do you see how the market takes out the previous cycle low? And keep in mind that we have that daily SMT as we saw on the hourly chart. What we saw occur right here is that the market immediately reversed and it displaced towards the upside. Do you see this very large BC which got created? Do you see how this BC got created whilst the market repriced above the high which formed inside of that CB on the left side of the curve? This is my market structure shift pattern. Whenever I see a CB high BC formation, that is to me a no-brainer buy within this framework. Therefore, I'm looking for the market to retrace into that range, and that is where I'm looking to position myself long. What I would like you to understand is that the market structure shift pattern is the strongest algorithmic signature which you can be looking for to confirm reversals taking place. Now, the pattern by itself means nothing. However, I hope that you understand that what I'm outlining to you is an overall framework which could already be spotted from the higher time frames. Notice that we saw the market tap into this very large BC, but do you see how the wicks just step into it and how the bodies don't even close inside of it? This is IOFET, Institutional Order Flow Entry Drill. What this tells to me is that there's a certain rush again for the market to begin expanding towards the upside. And whenever I see IOFET and I see the market displays higher, so expand in my favor, that is when I know I'm on side. We see the market expand higher. We create a very tiny inefficiency right here. Market retraces, and that's again a buying opportunity right here. And eventually we see the market expand higher, trading into that old breakaway gap. That breakaway gap functions as resistance price for a short bit. So you see a retracement originate from there. And the moment that the market then expands through that breakaway gap, that's when we can anticipate the market to really begin running. I took partials above the high of the regular trading hours up until that point, which were these relative equal highs right here. And I also partialed when the market reached the premium, so meaning a higher end of that red shaded box, which is that RBC. Now, the main takeaways which I would like you to understand when you look at this delivery is that I traded both the sell side as the buy side of the curve. However, I would like you to understand that what you're seeing in front of you is years of experience. Yes, this is not something which came to me overnight, the ability to do so. And this is not something which I would want you to think that you can achieve tomorrow or next week. And the reason why I mention this is because I want you to set realistic expectations for yourself and understand that whenever I show trades like these, you're probably thinking, damn. And I understand that. However, I hope that you look at this lecture from an inspirational perspective, because if you investigate everything which I've already taught publicly, you will see exactly what I'm showing to you and what I'm hinting at. So that is something which I really suggest you to dive deeper into. Now, when it comes to this market maker sell to buy model, I want you to understand that this was a market maker sell model, buy side of the curve, sell side of the curve, which turned into a market maker buy model, where you see the sell side of the curve, buy side of the curve. And that is one of the characteristics of market maker models, where a sell model turns into a buy model and vice versa. This is how the market moves. And if you still believe that these time cycles don't exist, well, look closer. Here we are at the 1 minute chart of Nasdaq on the left and the 1 minute chart of ES on the right. And what I would like to see is the following. What I would like to see is that on the highs, we saw that Nasdaq formed a high right here, whilst ES formed its high right here. So what you can see is that there's SMT present on these highs. And therefore, that's a sign that the market is likely going to begin expanding towards the downside. I note, however, that within my presentation screenshots right here, that I do not have the right high annotated on Nasdaq. I'm sorry for that. It should be this high. But you can clearly see that Nasdaq forms the high right here by this long wick, whilst ES did right here. So that was the SMT I was anchoring the idea of the sell program to. SMT is a confirmation tool, meaning SMT confirms a smart money reversal. However, if you understand AMD, you can already time when a reversal is likely going to take place. Notice, however, that when we pay attention to the reversal on the downside right here, what you can see is that Nasdaq took out the previous cycle low, the previous 90-minute cycle low, whilst ES created a higher low right here. And if you remember what we saw on the hourly chart, you will understand the importance of that. With that being said, this lecture comes to an end. I hope that you found it insightful. I hope that you were able to gain some insights from it. It made me smile a lot when I saw a lot of people participate inside of this buy program on the right side of the curve, because it was a typical setup as I'm teaching it to you publicly. And therefore I was very happy to see that. With that being said, I want to thank you for watching this all the way to the end. I want to wish you good luck in your studies, and I highly suggest you to check out the 2025 public mentorship playlist if you want to hear more details about this particular setup, because it's all laid out in there. I want to wish you good luck in your studies and be safe.